I'm Jeremy Glazer with Morningstar.com. Johnson & Johnson reported a mixed first quarter this morning. I'm here with senior pharmaceutical analyst Damien Conover to discuss Johnson & Johnson. Damien, thanks for joining me.
Thanks for having me, Jeremy.
So what in this quarter were the strengths and weaknesses for Johnson & Johnson?
Yeah, so when we take a look at Johnson & Johnson, there's three main divisions. It's got its pharmaceutical group, its over-the-counter group, and consumer healthcare group, and its last one, the device group. Now, if we take a look at each one of these segments, there's different strengths and weaknesses. First off, its pharmaceutical group, a lot of generic competition, but that was expected, and we're almost at the end of that generic competition, meaning we're about to annualize it, and really sets that division up for some nice, strong growth going forward. Shifting to the consumer health group and the over-the-counter products, that group had some headwinds because of a product recall, but again, that looks like that's in the rearview mirror. Looking forward, looks like some strong growth going forward. And the device group, very strong quarter, very good growth across the entire group.
So even though the quarter might not have looked great, we think that they're probably set up for some growth going forward.
Yeah, I'd say the underlying fundamentals look very, very strong. Even though the top line was flat this quarter, I'd say going forward, we're looking for nice growth going over the next 2 to 3 years.
Thinking about the stock's valuation, do you think it's a good time for investors to get in?
I think so. I think when we do a valuation on discounted cash flow method, we think there's a lot of upside. And looking at it from the traditional PE ratio, it's only at around 13 times 2010 earnings. So we think there's upside from multiple expansion as well as earnings growth.
With potential of strong earnings growth, do you think the dividend will follow, or are they going to be more conservative and hold that cash?
I think they're going to probably continue to increase the dividend in line with its earnings. Johnson & Johnson has one of the best balance sheets across all the pharmaceutical industry, so I think the dividend grows in line with its earnings growth.
Switching gears a little bit, healthcare reform has obviously been a hot topic. Has the company started to give any guidance as exactly how the bill, as it passed, is going to impact the bottom line?
Yes, Johnson & Johnson has given some guidance. So did Eli Lilly, which reported yesterday. This is a pretty critical quarter because this is the first time companies have given explicit guidance on what is happening to their bottom line with healthcare reform. And in general, what we're seeing is the bottom line is getting hit from anywhere from 2 to 5%. So it's meaningful, but it's not overly concerning in our view. And on top of that, this is the hit to healthcare reform initially. Over the long term, we expect healthcare reform to be actually positive. So at the latter part of this next decade, we think this headwind that they're feeling right now will actually be positive. So actually we see healthcare reform as a net neutral, but in the near term negative and in the long term positive.
Even with the uncertainty removed, though, the stocks haven't shot up like a rocket. Why do you think that is?
Yeah, it's a good question. I think what we're seeing is there's a lot of complexity behind healthcare reform, and investors are just starting to digest what it really means. And I think these first couple quarterly reports by these pharmaceutical companies are going a long way for investors to really digest what healthcare reform means. And I think as we come out of this quarter and start to move down and through this next year, people will be able to quantify the risk of healthcare reform, and that risk will come off the stocks, and we'll likely see some multiple expansion for the whole group.
So there could still be some opportunity there?
I think so. I think there's a lot of opportunity for the pharmaceutical group as we go through this year.
Damien, thanks so much for joining me today.
Great. Thanks for having me, Jeremy.
For Morningstar.com, I'm Jeremy Glazer.
At Morningstar, we feel it is important to schedule regular checkups of your investments. This is the reason we're pleased to announce Portfolio Monitor, a new and easier way to keep track of your investments. With a few clicks of the mouse, receive a monthly report that provides a comprehensive and customized summary of your portfolio, sent automatically to your inbox. Portfolio Monitor provides a concise digest of all the best features of premium membership. Become a premium member with our 14-day free trial to start receiving Portfolio Monitor today.